Hello and welcome back to the Rob Seco Field Ready podcast. I'm Andrew Crabtree. I'm guest hosting today, filling in for Jim Robinson. And today, we're going to speak with Rob Seco's own CFO, Ryan Halls, about the financial industry and how it might impact you on your farm this year.
Thank you guys so much for joining us. The objective of every product management team is to improve the product portfolio.
If you're farming today, you have to be excited about what's going on.
Favorite new advancement in this year's Corn Classic?
That's like asking somebody who their favorite kid is, really. So, but.
And so we really want to get to know what is exciting in seeds right now.
Well, welcome to the Field Ready podcast. I am your somewhat recurring co-host, Andrew Crabtree. I'm filling in for Jim Robinson today, so bear with me. Thanks for having me. And today we are joined by Rob Seco's own Ryan Halls. Ryan, you are not a licensed tax professional, so I just want to get that out of the way. I want to be really upfront. If you are here listening for tax professional, like licensed advice, go somewhere else. But if you're happy to listen to somebody who knows a ton about the financial industry and is going to be in a really good, engaging conversation and useful information, then I encourage you to stick around. Ryan, thank you for being here.
Yeah, thanks, Andrew. Great to be here. Looking forward to our discussion and see where we go from here.
Long-time listener, first-time caller, right?
Yes, definitely first time. Excited to be a part of this. I think talking about finance topics, I think it energizes me, and we're in an interesting environment, obviously. I can give a little bit about my background. So I'm the Rob Seco CFO, the Chief Financial Officer. Been with the company for about 2 years, a little over 2 years now. And my prior experience has been with Syngenta for 11 years in various roles, but all in finance, supporting operations, supply chain, and also on the commercial side as well. And my last stint with Syngenta was the Golden Harvest Controller, and then went over to Cargill for a couple years as well and got into different businesses. Was in cocoa and chocolate, animal nutrition, but wanted to get back into the seed industry, and had the opportunity to join Rob Seco, and it's been a good couple years already. So.
If anyone doubted Ryan's financial chops, he said he's been with Rob Seco for 2 years. If anybody doubted his chops, they need to ask him how many acquisitions he's been a part of in the 2 years he's been at Rob Seco, and I think they'll appreciate what Ryan brings to the table.
Yeah, thanks, Andrew. It has been
I would say you hit the ground running. Yeah,
for sure. About 6 months in, we had our first acquisition. 6 months into the job, and we've had a number of them since. We've had 5 seed acquisitions to date. And so it's been exciting to see the business really take off and grow. So good to be a part of it.
Absolutely. Well, as we're talking about finance, I think there are just any number of intricate, interesting, complicated, whatever you want here, number of topics that are unique to our present time and climate. So if we would have had this conversation a year ago, 2 years ago, 3 years ago, is probably a vastly different conversation than we're having today. Am I right?
Yeah, definitely. I think, we've really started to see interest rates start to rise and a lot of that, inflation pressures that we've seen. And I think, as we continue on in this year, we're, moving on into 2023, we'll probably continue to see this kind of climate where we're seeing interest rate pressures and increases over time. To try to lessen the burden of the inflation impacts.
No, you talk about interest rates, and I think that's a really good launching point because, and when we talk about something that, farmers need to borrow money for a lot of different things in a lot of different ways, right? And that interest rate impacts them. So, how has that changed even in the last 6 months to a year versus what it's looked like, in the more recent history?
Yeah, so if you kind of look back in time, interest rates have been very low for a number of years. Actually, we'll talk a bit more about the prime rate and what that really means, but that's a big gauge that we use to understand what the borrowing cost is for individuals and businesses. And that has gotten to where it's right at 7% currently. And historically speaking, if you look at over the last several years, in the last 15 years, it hasn't been above that level. So we have seen an increase in the cost of money and borrowing quite substantially. And in the last year, it's really taken off, obviously. We were at historic lows for several years. And really, the last time we saw a huge spike is in the late 70s and early 80s. And we actually reached 21.5%, which is crazy in December 1980. So we're a long ways.
If you think it's bad now,
yeah, we're a long ways from that, and we don't anticipate and hope that happens. But that is kind of the high water mark, I would say.
So maybe I would say for our listeners at home who don't know, but let's just go ahead and say for me who doesn't know, because this is, as we look at things that Andrew knows a lot about, finance is not one of them. How would you define the prime rate, and what is that exactly?
Well, I would say, to kind of back it up, obviously, interest rate is what is charged to consumers for the use of cash, right? And when you look at taking it to the Fed funds rate, and that's really kind of the basis. So the Federal Reserve sets a target rate for overnight bank lending, and that really kind of sets the stage. And so that's around 4%. And then when you get to prime interest rates, that's really what sets the stage for individual lenders and businesses. And that's really the primary index used by bank lending institutions for short and midterm loans, which could be, lines of credit for businesses or farming operations as well. And so that becomes really the basis. And that's usually about 3% higher than the Fed funds rates. So that's that 7% that I was discussing before. So I think, that's where we're at. And that's really the primary driver, I would say, is, you back it up to the Fed funds rates, but then you take it to what the prime interest rate is, because that's really what a lot of the consumers and the farmers and the businesses are really used to seeing.
So if I'm a farmer and I want to buy my neighbor's land, and I hear the Fed rates at 4%, and I get excited, I can't go as a farmer down the road. I can't go to the Fed and get that 4%. I have to go through one of any number of institutions that are between me and the Fed. Correct?
That is correct. Yeah, that is really for those financial institutions for overnight trading, because they do have regulations to abide by having a certain amount of percentage of cash at the end of each closing day. So that's really reserved for the banks, and obviously they have a cost to lend that out, and they're trying to make a profit as well. So really the prime interest rate is what we historically, as individuals and farmers and the like, really are accustomed to seeing.
That makes
obviously
sense.
There's programs out there that individuals can, get below that, but that's kind of the basis, I guess, for most lending institutions.
No, that makes sense to me. So you mentioned kind of, we talked about this idea of, the trickle down to the farmer and the grower. As we see these these rates raise, what impact is that going to have maybe immediately, and even as we go out a few years, what's that going to look like on farm?
Well, I think one of the big things is really, hopefully, depending on every farmer, everybody has a different balance sheet, different cash reserves that they may have. But I think it's going to definitely tighten, up a little bit, just because the cash is going to be more expensive. And so, looking at the cost that they would have to, if they're going to incur a farm loan, that is obviously going to go up. And so they need to consider that when they're looking at, buying that next piece of equipment or investing in their business. They need to consider the cost of that capital. In the last few years, obviously the cost of capital was relatively low, so it wasn't a big factor. But I think in today's environment, that's something that farmers, unless they're significantly cash heavy, they obviously need to consider. Like anything, you got to look at the return on investment. But I do think that you got to also look at that cost of capital a little bit harder these days. So,
yeah, add on inflation to that, and then the choices that get made on farm are maybe scrutinized more heavily.
Yeah, that's correct. Yep. It's important to put the pencil down a little bit harder these days.
Yeah, no kidding. Not just on the farm, but I mean, even at the grocery store. I mean, there's definitely harder decisions to be made than there have been in the recent years. So, when we talk about these interest rates, what you hear lots of things, but what are in your opinion the main drivers for the increases in the rates? Why are we seeing these rates go up?
Well, I think the biggest thing is really just to try to control inflation. As we've seen, the consumer price index, it's been above 8%. It's come down a little bit this last report. We'll have to see how it comes out in this upcoming report that'll come out in December. But hopefully the trend is continuing to see it go down. But it's really to curb the inflation, and that's what the Federal Reserve is trying to do. There's a lot of drivers that kind of set the stage up for this. You could debate on what are the big drivers, but I would say predominantly, obviously, COVID had played a big factor. Really the supply chains were disrupted, and that really did create a lot of havoc. And even in today, we're seeing, China having further lockdowns and all of that. We're such a global economy these days, those impacts really feel globally. We're not completely isolated in the United States. And so when we have big disruptions, that creates a lot of havoc. And then obviously, there was a lot of people that, during the COVID, there was a lot of cash that was actually put aside. And so that has started to bleed out into goods and services, and folks have been traveling and folks have been out and about, spending that cash reserves. And I think that's also obviously been a big driver is, we weren't able to do much for a couple years. And so, that has also put a lot of pressure in addition to the supply chains, into the inflation impacts that we're seeing today.
No, that's well said. I guess I'm hearing you say it's kind of a trickle down. So it may not be, the interest rates or how financing affects you may not be how things operate in Nebraska or Illinois or wherever you're listening to this from, but it's from around the globe, and it's maybe not even how things are affected today, but how things have been affected for the last 2 years.
That's correct. I think we just don't live in, we live in our little towns across the country or big cities, but there are global impacts that also impact us all. Obviously, the fuel prices have been a big contributor too, and don't want to negate how big that is. Obviously, when you see fuel prices spike like they have in the last year or so, that has a trickle-down effect as well, because all our supply chains are reliant on trucking that product to the market. So
I was going to say anybody that's filled a tractor with diesel fuel lately, I think, understands that impact quite well.
Oh, for sure. Yeah, it's a huge cost increase, and obviously we've seen input costs also. Fertilizers and the like have been on a record pace as well. So
I'm going to ask you now. So as I think the longer we talk about this, the more people understand the negative effects of interest rates and the cost of money and inflation and all of these things. But as a farmer is going to look to, okay, I have to survive this period of time, and hopefully things get better soon. But as I'm looking on how to maybe creative is not the right word, but what are some ways that guys can look and in other ways than just running to the bank and taking their money? What are some ways that guys can navigate around some of these higher costs?
Yeah, I do think, especially in agriculture, there's, a lot of programs for, seed or for other inputs that are available, because the interest rates really did increase really dramatically. And I don't think anybody could have predicted that. And a lot of companies, put together programs prior to, seeing what's fully happened. And so I do think there's still an adequate supply of good programs out there available, even some 0% financing programs that are in today's world even more attractive, because obviously we talked about, the cost of money and what that looks like today. And so that is a huge opportunity for these guys to, not take out a loan, but also get their inputs that they need and hopefully get, a 0% or maybe even a cash discount. In addition to that, I think there's definitely some opportunity out there in the marketplace to secure your inputs with very little cost to you still today. That may change in the future, but I will say that there is still a number of programs out there that offer some very attractive financing. And again, it's more important today than it was a year ago. I think these programs are even more beneficial to the grower.
So hopefully we've got a wide array of Rob Seco customers and dealers and Master's Choice customers and dealers listening to this podcast. And so for people that are in this, in the Rob Seco kind of family, what specifically does Rob Seco have that might be of interest that could help them out?
Yeah, no, I mean, we definitely offer finance programs through Robo and JDF. We actually have a December 15th period coming up, and there's an 8% early cash. So if you have cash, that's, a great opportunity to get in there. And we also offer, 0% financing even through January 15th that wouldn't be paid until the following December. So very attractive programs. Again, with the cost of money today, I think those are very significant for our customers. And, I think we've continued to see more financing taking place this year. We anticipate we're going to see a lot more, when the 0% kind of rolls off here in January. So we're excited to continue to offer that this year. And I think it is obviously a great way to lock in, get your seed purchases, and not really have a financing cost for this year. So that's pretty impressive.
No, it is. That's good information, and I think that's something that right now of all times can really help some people out. So we've spent some time kind of talking about how these things impact individual growers are kind of like this on this micro scale. But if we back up a little bit and let's take more of a 30,000 foot a view of things as interest rates rise, and hopefully they don't continue to go too crazy, but let's just say that they do continue to rise. How do you think what could you see in agriculture or in seeds as a whole that might look a little different than it has before?
Well, I think, when I look at it a little bit, deeper, you kind of can see a few things that are going to happen over time. Land prices, they've been at historic levels. There's a new dynamic in there. You got investors out there looking at land, but, if everything was equal, you would expect land prices to start to stabilize and maybe even go down. Obviously, we've seen in the housing market, some of that, has also started to shudder down. But as you continue to increase the cost of money, that's going to put more pressure on the ability for people to purchase those assets. And so, land would be one. I think you're going to see machinery, a lot of machinery. We've seen very high machinery costs, even, used machinery for a number of years. And I think you're going to see a lot more pressure there. Obviously, cash is king. If you're sitting on a good pile of cash, you might be able to get some attractive deals in the future. And so I think there will be some good opportunities for guys in that situation. But, I think there's going to be downward pressure, albeit, there's a few new dynamics that we haven't seen historically speaking. But I think you're going to see, if it continues to be at the interest rates continue to rise as they have been, I think we're going to see, continued pressure and clamping down on big purchases overall. And that's no different in the business world as well. You're going to see, unfortunately, tougher decisions if it continues down the path where interest rates continue to climb. Hopefully we never see 21.5% again. I don't think that's realistic, but that would be a very bad day. Yeah.
So maybe instead of buying a new truck, we put new tires on the old truck.
Might be a good idea just to reserve some cash, just for, something that might come down the road versus investing wholeheartedly today. Probably is a wise decision to maybe hold off unless, you're sitting on you just sold a bunch of grain at, $14 a bushel on your beans and $6 on corn, and you're really scratching your head what to do. But, I think it's a good opportunity to set back a little bit.
I would say you could take that nice pile of cash you're sitting on and go buy a new Ford, but I don't think you can do that right now, can you? Haven't we learned that lesson at Rob Seco? There's no new Fords to be had?
Yeah, they're hard to come by, that's for sure. I think for an individual, it's a little bit easier, but we operate a fleet, and so that has been a challenge for sure.
Well, I probably put some bad information out there. I said instead of buying a new truck that you should put new tires on it, and I just put tires on my wife's vehicle, and they are not immune to inflation either. So I think rubber is another one of those things that's up right now. So maybe wait on the tires too. I don't know. That's for you to decide.
Well, we want to make sure you're safe though.
Yeah, that's true. You got to balance that out. Just to wrap up here. So what reasons would there be for optimism right now? I know that there's, like we've sat here and we've beleaguered how much more expensive things are. What reason would there be for hope? And, hopefully we can leave the people listening to this on a happier note than just like, hey guys, inflation sucks, get used to it.
Yeah, no, I don't think it's all doom and gloom for sure. I think, it is something we haven't seen in a number of years, right? And so it's kind of getting used to that new normal. But I think, if you look back in time from 1950 to today, the average prime index or interest rate has been about 6.5%. So we're right a little bit above that right now. So we're not like out of the realm of, craziness, I would say. I think we're kind of middle of the road, but, it could get a little bit more tense in the future. But I think there's a good opportunity. People just need to really look at their investments. I think there's a lot of new technology out there too that offer, we have streamlined ag business, and, so there's crop inputs that can really enhance your product performance. And with the current environment of high commodity prices, it's important to protect that and get the most benefit out of, those new technologies that are out there. So I think with the high commodity prices, it's protecting that investment. With anything, you got to look at the return on investment and really understand with that new cost of financing to ensure that you're factoring that in as well and taking advantage of those, very attractive programs that may be out there today. So I think it's, trying to cut costs where you can, but it's still looking at those opportunities where you can truly add value, and it's all about return on investment. And so it's not that you shutter anything down. You really focus on what's going to drive your business and drive your business profitably. And I think that's what's important. It's important in any day, but it's probably worth a little bit extra effort to look at those options as you see the cost of money increase.
Yeah, well said. And as we wrap up, this is kind of my last little prompt here for you. But is there? We talk about hope and ways, reasons for optimism. Are there some ways that guys can navigate through maybe this little bit of a difficult stretch that maybe benefit them in the long run? Maybe there's some good habits that we can learn or some bad habits that we can get out of that maybe, if maybe the one thing that they really take out of this little tough stretch is that, in the future, they're going to be a lot more solid business.
Yeah, I think it's just, continuing to stay the course, looking at the long-term view, not getting in the short window of, I think there's a great opportunity as you look forward too. It's not doom and gloom just today. I think it's going to continue to be a prosperous several years. Obviously, commodity prices are still at a great attractive level where farmers, albeit the inputs might be a little bit higher than what they've been used to the last few years, but there's still good ample opportunity to make a good profit. So I think it's continuing to stay the course, to look at those long-term growth investments, understand, your cost of money, and just make better, more intelligent decisions based off of the facts that you have today. And you can't anticipate everything, but it's really just, focusing on those pieces of your business that you can improve. You might have to not do everything once. It's not an open checkbook, but I think you got to really just take a little bit more caution. But I think it's always good business practice to ensure that you feel comfortable with an investment that you're looking into and ensuring that it's going to add value to your bottom line.
Well, very well said. Ryan, the next time you come on the podcast, you will not be able to say it was your first time. How's that feel?
Oh, that's great. Finally, I got my first one out of the way, and I look forward to being a part of it in the future. So thank you.
Well, we really appreciate you coming on. I learned a ton, so hopefully that means other people did, but they probably started from a stronger place than I did. But we appreciate you coming on. We can't wait to do it again.
Thanks, Andrew. Appreciate it.
Well, that's it for the Field Ready podcast. Thank you so much for listening, and be sure to check back on the 1st and 15th of every month for new episodes. Be sure to subscribe if you haven't done that already and leave us a review. We would really appreciate it. And that's it for us, and be sure to stay field ready.